tax loss harvesting. What is it? What are some cautions? And what is my favorite use case for this financial planning tool? Hey, I'm Kaleb Paddock, the founder of 10 Talents Financial Planning, and today we're talking about tax loss harvesting. It hasn't really been talked about during a raging 12-year bull market, but it is becoming a little more popular, and I thought I would address it today. So first, what is it? It's basically the idea of selling investments in taxable brokerage accounts at a loss. You're intentionally selling at a loss, but the reason you're doing that is to be able to take the money, reinvest it in something else. You're not market timing, you're not just sitting in cash, you're gonna go invest in something else, but you're taking a loss so that you can offset gains in other areas. Maybe stay below certain adjusted gross income levels. Maybe protect certain child tax credits. Maybe protect other tax benefits by offsetting your gains with losses specifically for tax reasons that make sense that year based on your income brackets, etc., etc. So you're intentionally selling at a loss, not to time the market, not to sit in cash permanently, but to be able to perform tax saving maneuvers. Now, what are some of my cautions on this? Well, a lot of folks nowadays use robo-advisors, and these are automated algorithms. And quite frankly, while they're awesome in terms of automation, those robo-advisors don't know what other accounts you have. They don't know what you're doing with your trades, and you can really blow yourself up with something called the wash sale rule, where if you're doing this tax loss harvesting with your robo-advisor, suffice to say, you can really blow yourself up on a tax standpoint if that robo-advisor is unaware or you have other accounts that they don't know about and you're doing active trades in other places. There have been articles in the Wall Street Journal about this, Forbes, where they highlight investors that were do-it-yourself and they just didn't realize like what was happening at these robo-advisors and how it affected what they were doing. Because this wash sale rule with the tax loss harvesting, while it takes place in brokerage accounts, if you're messing around in your retirement accounts, those trades in retirement accounts affect the trades in the brokerage account for this topic and for this purpose. So use caution, be very careful. If you're a do-it-yourself investor, understand what you're doing, and be aware that there is caution around this. If you see that your robo-advisor is promoting or bragging that they're doing this on your behalf, make sure you do your due diligence. Lastly, what is my favorite use case? My favorite use case is when we have a client who has a concentrated stock position. So this would mean like a publicly traded stock, and you've got way too much of it to be in a risk managed appropriate position for your financial plan, for your cash flow planning. So we'll want to sell. The number one thing, the reason you don't want to sell, and I know this, is because you don't want to pay capital gains tax on that. Because you're like, if I pay tax, it's like I have to pay all this tax. I'll just hold the stock. It's probably safer to hold it than pay tax. Well, if you can do tax loss harvesting, let's say you have 50,000 of gain from selling some stock. Let's say you were able to come up with 50,000 of losses in your stock and bond funds in a down year in the market. Your company stock is positive because you've owned it for years and it's just appreciated massively over time, but you may own some stock or bond funds you can sell at a loss. If you can offset those, well, there goes your excuse. You can't use capital gains tax as an excuse anymore because we just wiped it out. You wouldn't owe any capital gains tax on selling that stock. We can accomplish diversification in your portfolio. We can accomplish financial planning goals that we've set out, and there's no more excuse that you don't want to do it because of taxes. So that's probably my favorite use case. Again, this is not trying to time the market. You can see how much a position is down and sell at the time you would like to lock in that tax loss for tax purposes, but it's not timing and we're not just sitting in cash waiting. We'll find something else to invest in. But anyway, that's my favorite use case. So thanks for watching the video today on tax loss harvesting. I hope it's been helpful for you. Bye-bye.